My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to make a little money. My job, not just entertainment, but put it in context. Explain it to you. Call me, 1-800-743-CNBC. Tweet me at Jim Cramer. When you're trying to get your arms around the market sex move, you got to look at the leadership, meaning what's been working day in and day out. And that's how you can figure out how to make money at this moment. And on a day where the Dow gained 172 points, the S&P was basically unhinged, NASDAQ dipped 0.18%, it might surprise you to learn that there's an index that's been burning like a house on fire. It's a strange index. It's pointing the way. It's the Dow Jones Utility Average, or the Utes, as they are known on the street. The Utes, which rallied 5 points or 0.5% today, still one more powerful session for the smoking amalgam of 15 utility stocks that dates back to 1929. Yep, this trailblazer started separating itself from the pack back on April 16th of this year. You know what? This seems been almost straight up ever since. The utilities perform best when the economy's throttling back. If this index were just up for a week or even 2 weeks, I might ignore it. But for the Utes to rally this long, sorry, it is flashing red for the economy, telling us we're headed into the shoals of a slowdown. Makes sense. We've been finding those brown shoots I talk about all over the place this month. Brown shoots being my term for companies with fading prospects. When you notice one of these index C changes like I'm talking about, you got to head right to the Wall Street Journal's archives to identify the proximate cause of this new leadership. Oh, this one wasn't hard to find. The headline from April 16th says it all. Powell dials back expectations on rate cuts. And then right underneath, inflation and hiring have been firmer than expected this year, weakening the case for preemptive rate reductions. Nick Timros, hey, Fed whisperer. Okay, Powell was signaling a clear shift in the Fed's outlook right there, according to the Journal. This was the fabled higher for longer interview. Not only was the multiple rate cut scenario off the table, but maybe rate cuts are out entirely because Powell now wanted, quote, several more monthly inflation readings to regain the confidence to take rates down. Bingo. We'd known something was afoot ever since we got that very hot 3.8% core inflation number the week before that headline. Talk about a narrative buster. But this was Powell's interview. It was devastating. Devastating because at the time, we still had this host of people who believed the Fed was going to bless us with multiple rate cuts in 2024. Hey, maybe even before we saw genuine weakness in the economy. These people were deluded, but they generally believed the same people were looking for 6 rate cuts in 2024. Oh, boy. When we came in the year. Now, for the last 3 weeks, though, these people have had no more delusions. And that's when the utilities took off. Unfortunately, very unsatisfying kind of leadership. First, utilities have to issue debt all the time just to maintain their operations, let alone expand them. Now they have to spend more than ever because of our electric grids being overtaxed by the creation of endless new data centers. If rates were going higher, their need to borrow would send their stocks down. That's clearly not happening. Second, think about it. You pay your electric bill no matter what, right? It's the only bill you cannot not pay. The opposite of discretionary, which is why those stocks do so well in the slowdown and the discretionary stocks do so poorly. Now, remember, the utilities are leaders, not what we call coincident indicators, but leaders. They tell you what's going to happen. A rally in these stocks almost always means that the economy is weak and interest rates are headed lower. Sure enough, on April 25th, remember these guys were April 16th, on April 25th, long-term rates peaked. Not because of the Fed, but because many a consumer seems to have tapped out. And that was the beginning of the brown shoots. Right there, right then, we started seeing the slowdown that's now bedeviling so many years. It's when we realized that Starbucks and McDonald's had raised prices too high. The travel, so prevalent since COVID ended, had peaked, at least in America. It's when we knew that oil was done going higher, especially now that Israel and Iran seem to have de-escalated. Oil's been inching lower for days. So it makes sense that the utilities are leading the way here. But what more can this leadership group tell us? First, you know what we got to do? We got to break out the old hedge fund playbook to see what works in this environment and recognize that this market has some newfound hazards. Hazards that could make us course correct from usual playbook design. For instance, we know the drug stocks go hand in hand with utilities, but there are plenty of drug companies that aren't doing well. So we got to be a little more selective than usual. For example, normally at this point in the business cycle, I tell you to go buy Bristol Myers, the quintessential slowdown stock. But Bristol Myers doesn't have enough in the pipeline right now. So The drug company with the best pipeline is Merck, with an amazing array of anti-cancer, immunology, and cardio drugs. Hey, look, or you can say, don't overthink it. How about Pfizer? Yield almost 6%, host of new drugs, or just go with what's really working this year. Eli Lilly, because of the weight loss wonder drug. Or do what we did today with the charitable trust. I mean, follow it along by joining the CNBC Investing Club. We bought some Abbott Labs. Dividend aristocrats being crushed, dropping from 121 in March, 105, despite a terrific quarter 3 weeks ago, because a competitor in the infant formula business, that's one of their lines of business, they lost a lawsuit badly in the death of a baby. It's a rare occurrence, but now it's got Abbott shareholders running scared like it's J&J or something, where they got a litigation morass. In the old days, you could buy pretty much any food stock at this point, but the arrival of these GLP-1 weight loss drugs has thrown that group into a tizzy. We know these drugs reduce cravings, but we can't be sure which one it reduces. Neither Coca-Cola nor PepsiCo have seen any degradation, though. They've told me that, and there seems to be a long way to choose, just my version, my view, between these two in the carbonated aisle. PepsiCo, which has Frito-Lay, which conceivably could be hurt by GLP-1, got these small form factor bags, selling very well. Beyond the traditional slowdown stocks, there's something else we noticed today. If you have a theme that can outrun the utility leadership, that money will crowd into it. Now, we know one. It's the data center. These warehouses of servers are being put up everywhere, something we've seen practically every day. Last time we got word from Arista Networks, one of my favorite companies, one of the best makers of networking equipment that links NVIDIA chips to where the knowledge needs to go. Arista's business is growing nonstop, and that also ignited Broadcom, a competitor, and also a charitable trust name. Meta took off. Alpha and Amazon stayed still. Apple's been good, too. The group can be fractious and unruly. Tonight, ARM reported, and the semiconductor light company gave us a weaker outlook than expected, so the stock's down a lot, but I'm not sure it's going to stay down. Oddly, there's one other group that's playing on razor's edge. It's the banks. In theory, they do well if rates stay higher for longer, but they also have fewer credit problems if rates come down. The financials are fickle, though. Be careful. As we know from the stocks of Upstart and Affirm, two fintech companies with stocks that got obliterated today. I will have Affirm on later in the show. But then J.P. Morgan vaulted 2%. I'll take that sweet move. When in doubt, I say stick with what's worked in the past when the Utes soared, not necessarily what's working at the very moment. But the bottom line, at the end of the day, the Utes, they never lie. When they're rallying this steadily, these stocks are screaming that Jay Powell may have gotten the ball rolling for that slowdown simply by warning us that he's not going to prevent one as long as inflation stays high. Yet Powell called it simply by saying the rate cuts are on hold, causing anyone who's holding out for better times to throw in the towel. And when you take the utilities higher, you're throwing in the towel for certain. How about we go to Alex in Pennsylvania? Alex.
Hey, Jim, how's it going? I just want to say I love your show, and I'm from your neck of the woods out here in Bala Cynwyd, PA.
Bala Cynwyd, some people who are ill-informed call it Sinwood, and we have to correct them. You know, it's a Welsh name. People don't know that either, but I got that all in my head. How can I help?
Hey, Intel, what's your take? I mean, here, Biden...
Okay, I'm going to tell you something. Just stop right there, because you're a Philadelphia, I'm Philadelphia. Nana Mary, a true Philadelphian from the north side, always said one thing. Nana Mary said, if you don't have anything good to say about something, then don't say it. Nana Mary says, I ain't talking Intel. Let's go to Rebecca in New York. Rebecca.
Hi, Mr. Cramer. I want to thank you so much for talking to my grandson, Arya, yesterday.
That kid's got horse sense. I like that. It really got a good rap.
Well, I think he got it from me because we watch his show practically every night together. I try to explain everything to him.
I knew it had to come from somebody.
Oh, you are so sweet.
Okay, that's me.
I wanted to ask you about American Eagle. And they were doing well, then I see it just going south. What do you think?
You know what? They have the hot stuff. The problem here, Grandma, is this. When you get to the hot stuff, you got to get in and you got to get out. That's too hard for me, too hard for you. Let's go with more traditional. Let's go with something like a Walmart or my favorite, and yours, no doubt, Costco. That's what we're going to go with. And the kid stays in the picture. Look, at the end of the day, the Utes never lie. And when they're rallying like they are like now, house of fire, you got to prepare for a slowdown. Mad tonight. There's been a lot of talk about a slowdown with the consumer. So are they staying away from the Dutch bros? Or is that bucking the trend? I'm going to speak to the CEO. That Affirm reported a really terrific quarter. So why are investors selling this buy now, pay later name? Maybe they're wrong. And if you wait on the Fed to cut the rates, well, you might want to add at least one REIT to your portfolio. I'm checking with Federal Realty, which is a shopping center, don't call it a mall, to learn about the latest in the space. So stay with
Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.